Greg, we saw Woolworths trading very well today, financials up, and then the resources kind of a mixed bunch. I saw Kumba up there and some of the others, and then, you know, just evening out to kind of a flattish market today.
Yeah, well, look, Kumba particularly, you know, there's hope that the Chinese economy won't have a hard landing, and that they will continue to import iron ore. And in fact, iron ore imports are up in China, and Kumba will report in July their results, so people are looking at a decent dividend again. So that was driving Kumba, but the resources generally, you know, tale of two halves, gold down. I think people have been pricing in more quantitative easing from the Federal Reserve. If that the gold prices may be telling you that maybe the market is going to be a little bit disappointed. If that does happen, if the market is disappointed, we're likely to see quite a sharp sell-off in the markets with that disappointment. So yeah, it's been, but with the lower inflation numbers, and people think that, you know, it'll be good for consumers and people who have debt, it will ease the burden for them. So you're finding shares like Woolworths and that doing quite well.
Gold pointing to us maybe seeing another opportunity for buying in the market. You mentioned Kumba. Kumba, a stock that we know is very well known for its high dividend that it pays, its good relations that it runs in China with all its sellers there, or buyers there that it sells to. Also a long-term play in the sense that if we look at Transnet and the infrastructure building from that source that's coming through might open the door for Kumba to export even more.
Certainly, look, at 62% of Kumba's exports go to China anyhow, and as you know, the rail capacity has been a problem for commodity companies, so any improvement of that certainly means that we could take advantage of that.
What about platinum there, Greg? Because it's been the sick commodity of the sector for some time. There have been issues around production. There's a surplus. We've been told that for the next year or so there will be a surplus. And yet we've seen quite a lot of activity on the market. And the relationship with the gold price, there was a narrowing, and now it appears to be moving apart from gold again.
Yes, well, for many years that, you know, the platinum price traded at a premium to gold. That has certainly changed for some time now. But I think platinum, you've got to understand that, you know, platinum is really only going to perform once you see a recovery in Europe, where there are more diesel cars than certainly in the United States. There's also been, you know, a lot of new entrants to the market for platinum. So I think you'll have to see some consolidation there.
But isn't the point that we know that Europe will recover? Europe's not going to go away. Eventually it will recover. They will want, you know, catalytic converters for the diesel. And in other words, is there not a value opportunity in the platinum shares where, while everyone's being gloomy about it and looking depressed at closure of shafts?
No, I agree there's an opportunity. You know, Anglo American is having a review of their Anglo Platinum operation, so maybe will be a cut in production amongst other things. You've seen the joint venture with Aquarius that they shelved, Anglo Plats, so that could be beneficial for the platinum counter. But I certainly think there's an opportunity for platinum if you're taking a longer term view, but in the short term there are probably better opportunities in the resource sector.
All right, we saw Remgro unbundling the likes of Impala Platinum. So being at that low prices, that's something that those investors should actually hold on to rather than just let it go.
Yes, look, some investors who might be small holders of Remgro will end up with only 5 or 10 shares. So there might be an overhang for a while as, you know, lots of small holders of Impala sell the stock. But certainly if you receive some Impala in the unbundling, there's a very good case to be made to be buying more at these levels because, you know, the share has really been beaten down considerably.
What do you think of the view, Greg, that the performance of the Aussie over the last couple of days, particularly 2 days ago where there was the sudden surge, certainly more optimistic than the European and the other markets and the other emerging markets have been. The point has been made that there's an appetite for investment here and it just needs the signal to get going.
I think there's an appetite, you know, globally, people sitting on, certainly institutions sitting on a huge amount of cash. And, you know, if you invest it into bonds, you're getting very little return. So equities give you a pretty good return in terms of dividend yields, and of course the share prices have been beaten down. But I think the market is really saying, well, look, you know, we know probably a large extent of Europe's problems. We know that the United States will probably look to, you know, will come out of their slump, and you're starting to see housing numbers get a little little bit better. People focus on the fact that China is slowing down, but bear in mind, China is slowing down as a result of a deliberate policy by the Chinese government to slow the economy. So I think that investors understand that there's really nowhere to go. Equities remain certainly a long-term buying opportunity.
Greg, just a shorter term view on a general direction of our market. Do you think we'll have another chance to get into equities at a cheaper level? Do you think there might be a sell-off after tonight's meeting of the Fed?
Well, look, I think I'm not so. I mean, in very short technical terms, if Mr. Bernanke disappoints, you'll probably find that the market will give up some ground. But I think where you might get an opportunity is that if the European debt crisis gets out of hand, that if things, never mind Spain, if Italy becomes a target as well, that is the problem. There's talk now that using these bailout funds to try and lower the rate of the cost of borrowing by buying a lot of these bonds. So if that does happen, so you always get an opportunity in the markets. Sometimes you have to be patient.
Good to have Greg Katzenellenbogen. Thanks for your time there, Director at Sanlam Private Investments.